Right, I want to run through the price action of December the 10th, and it was exceptionally, and I mean exceptionally difficult, and tied my head in a little bit of knots. So let's take a look at it, and this is about the most difficult day that you could possibly imagine. So let's take a look. Let me wind it back. Okay. So from the start of the day, it starts off pretty easy. At exactly the market open at 2, we have a trading range, we have a false break to the downside, and we have a touch of the Bollinger, higher close, lower close, set up complete. We place an order to go long here, stop loss here, instant winner. We immediately shoot into an uptrend. Now, at this point here, we have the highest high the highest close in the uptrend with a bar-to-bar decrease in ATR. So you can see that ATR goes down. So immediately we stop taking short setups and only look for long setups. We look for hammer candles in the uptrend that touch this, at least this 8 EMA. This is not quite a hammer candle. This is a hammer candle that doesn't touch the EMA. This is a hammer candle, even though it's a down close. It fits the definition of real bodies equal to or greater than 2 times the lower wick and a close in the upper half of the range. Now, what we need to do is check, do we have confirming evidence on the higher time frames? And you can see the 10-minute was walking. Look at where it is. I put the cursor there. It's walking on the outside, walking up the outside of the Bollinger here. And here we have a pullback that's touched the moving average. That is perfectly valid, confirming evidence. We have an entry, gone up for a little bit, and then lost. Now, the interesting thing here is even though it's a loss, 240, let's check the spreadsheet, 240, we size it on a 3-pip range, but it only lost 1.5 pips, so that was only a half an hour loss. Now that's critical to understand. Our entry is the nearest half pip above the high. The high is 71.2, so we enter at 71.5. The low is 70.2, so our stop loss is 70. So even though we're sizing the position on 3 pips, we're entering, well, we've only lost 1.5 pips. So, you know, if we're trading $1,000 odds, we've only lost $500 or whatever. Okay, at this point, you can see we've made fresh highs in ATR. So we're no longer looking for hammer candles in an uptrend, so we don't consider taking this bad boy here. Tricky. Don't consider taking this bad boy here, which we wouldn't because it hasn't touched the EMA anyway. But we have a touch of the Bollinger, higher close. Now we're waiting on a lower close or a hammer candle to complete the setup. Hammer candle completes the setup. This is a beautiful, and I mean beautiful, setup, and it's worked. Now we are long. If we get a short setup, we would exit the short. We would exit the long setup. Now here we have the highest closing high in the trading range. In the trend, and look at ATR here. Look at how it goes down from this bar to this bar. So at this point, we stop taking short mean reversion trades, and we start stalking long trades. Now we are already in this long setup, this mean reversion long trade, so we cannot consider taking this bad boy here. Even though it would have worked, you can see the stop was not touch before it hit its target. You can't fool yourself and take 2 setups in the same direction at the same time, because that's bullshit. Okay, here immediately we have fresh highs in ATR, so we start looking for mean reversion trades again. We have one set up here. It's not quite high and tight yet, but then it breaks out to fresh highs. The moment it breaks this high, it's off the table. Now, start setting up again, another touch of the Bollinger, 1 or more lower closes, 1 or more higher closes, setup complete. This is high and tight. All we need to check is multiple time frame confirmation. And let's have a little look-see there. And you can see that it's touched, if you look at the cursor over here, it's touched the Bollinger there. So we take this short setup here, stop loss here, loser. So how are we doing? That was 348. Let's just check that it's in there. 348, Okay, that was a 1R loss, and the previous trade was a 1.17R win. Okay. Now, the highest close in the whole trend so far, we've got to check, do we have a decrease in ATR? And yes, we do have a decrease in ATR. So at this point, we stop taking mean reversion trades and we start looking for hammer candles in an uptrend. And we have this one here, 408. Let's check for confirming evidence. $4.08 hammer candle. Okay, 76 and 74. Okay, so this has gone up. We've entered in long here. Our stop loss is here, and we've been stopped out. Now, I have made a mistake, which I've just discovered, because we could not have taken this 420 hammer candle in an uptrend while we were already long this trade. So both of them aren't valid. So the 420 trade needs to be taken out. Delete row. And I need to add this to my mistake column. 12th of 10th, 420 had losing trade in shouldn't be, and that made a positive difference to our R of 0.66. Okay, so that is a mistake that I made. Let's be clear about what happened here. You cannot take two trades in the same direction at the same time. This is a valid trade and this is a valid trade. Both are losers. But you should not be taking the second trade while you're in the first before the first is stopped out. Okay? Makes sense. Now, we are skipping mean reversion trade. So we're skipping this short trade that would have happened here, which is good because that wouldn't have worked. What else are we doing? We have made fresh ATR highs here. So as soon as we make fresh ATR highs, we start to look for short setups as well. So here we have a touch of the Bollinger. We're waiting a lower close and a higher close. It becomes very high and tight. So our target is about here. And let's look at our confirming evidence. You can see that we have a touch of the Bollinger on both the 5 and the 10 minutes. So this is an easy trade to take. There's nothing controversial about it. And 508 RTV, 3.5 pip profit. And the next one is 542. Okay. Now, this becomes very interesting. So if this was a breakout down from a trading range like this, then it would be very easy to call this move a downtrend. But in the context of a previous uptrend, this is not a downtrend yet. So where would this become a downtrend? Not quite sure, but probably one leg further down. Certainly not a single straight shot down like this can never be considered a downtrend in the context of an uptrend. So even though we have decreasing volatility on the move down, that decreasing volatility indicates that the trend is running out of steam here in the context of the previous uptrend. So we have at 536, we have a touch of the Bollinger, higher close, lower close, also a hammer candle, and we go long, nearest half pip above there, stop loss here. And if we look at our 5 and our 10 minute, the 10 minute is an uptrend with a pullback to at least the moving averages and evidence that it's over. The 5 minute is the unequivocal touch of the 5 minute Bollinger. So we get a nice easy win there. So this is a win, this is a win. Now, this is an uptrend again. So we have to be alert and strongly alert for decrease highest close with decreasing volatility. So at this point, we are in low volatility trending mode. So we are waiting on hammer candles. We are not taking short mean reversion trades. So we're waiting on hammer candles in an uptrend that touch the 8 EMA at least. This one does not. This one does. So we check whether or not we place it. And we place the order. Our high is at 829. We place the order at 830. This next bar only goes to 827. We would only leave that order on if it was a double top, and it's not a double top, so we remove the order. Now, the rationale is that if this is going to shoot up, it's probably going to shoot up straight away, like this. If it messes around here and doesn't break the high, then the buying pressure is not that strong. Okay, 656, let me check, 654, okay. We have hammer candle in an uptrend. If we look at our confirming evidence, uptrends with pullbacks to at least the moving average, that's unequivocal. We take this setup and it goes up for a little bit and then loses, stops us out, but check this out. Our high is 82.7, so our entry is 83 and our low is 81.3, so our stop loss is 81. So our entry is 83, our stop loss is 81, so we're risking 2 pips even though we sized the position for 3 pips. So our R value is 3, but we've only lost 2, so it's only a 0.67 R loss. So what we're doing is we're keeping, on this kind of very, very difficult day, we're keeping our losses small. Now, once again, we have touch of the Bollinger, higher close, lower close. Let's check confirming evidence. It's good on both the 5 and the 10. Unequivocal uptrends, pullbacks to at least the moving average zone. Not bad at all. Now, we go long here. Our high is 81.2, so we go long at 81.5. Our stop loss is at 80, so we're risking a pip and a half on a 3 pip R value. So we've lost half an R there. So where are we now? So 710, let me check it. 710. So lost 0.5 of an R. And now, when does this become a downtrend? Probably about here, and it does not. So we're skipping long trades. We got 754 in there. Okay, this is an interesting question. If this is a downtrend and we have a decreasing volatility downtrend, we have, with this bar, made new ATR highs, cancelling decreasing volatility mode. So at this point, we have a confirmed setup. This should be in. So this is long setup. Our stop loss is never hit. Our target is up about here, so it takes us out. So this is entered at 7:54, a couple of minutes before we stop trading, and it provides us one more nice win. All right. So, all right, so let's see how we did for today. But before we do that, the thing that I want to point out is that today was extraordinarily difficult, and probably as difficult as you will ever see on this system. But let me share my screen again. On the very difficult days, look how many trades we took. We took a fuck ton. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades. 10 trades in a day. Usually some days we're only taking 2 or 3 or 5 or 4. 4 or 5 would be normal. We'd take 10. Now let's see how we went. So of those 10 trades, it's almost impossible to know while you're in it how you went for the day. So we went 10 trades, 2.5 R, 1, 2, 3, 4, 5 winners, 5 losers, 2.5 R. Very, very difficult day. After slippage and brokerage, this most likely would have been a very small win for the day. And you would have to be very, very on the ball and very skilled to trade this, and you'd be getting pretty frazzled by the end of the day. So, 2.5. Okay, so let's just take a little look at how we're going. So the equity curve looks, well, frankly beautiful. After 233 trades, 146 wins, 84 losses, 63%. Our average win is 1.12. Our average loss is -0.82. So we've got a 1.37 profit factor, which is low, and it's doing what it's supposed to, right? This was a very difficult day. The following days were very, very easy, and that's a property of the system as well. So yeah, hope you enjoyed the video.